Good afternoon, everyone. This is AJ with FBS Securities bringing you an update video. I know it's been a while, and last video I basically sort of marked the lows for the market, and since then we've been up almost 22%. But just kind of wanted to cover and go over some performance as well as some charts and kind of see where should we be headed. So before I go any further, this information is for educational and informational purposes only. It should not be considered investment or financial advice. So, really quick, so now S&P as of yesterday and the Nasdaq are both positive year to date after seeing a basically a 20% drawdown from the highs on the S&P and then a 25% drawdown for the Nasdaq. And now, technically, we're back into a bull market. Both the indices have rallied more than 20% from its lows, which also indicates a bull market. So, I mean, an absolute whipsaw price action. We had the biggest flip in sentiment, positioning, and sort of everything just within a couple of months, right? I think towards the lows, the recession talks were at its very high. Almost every large bank and institute was revising their S&P price target to much lower, and then as we rallied higher. Again, most of those talks sort of faded, and a lot of those recession sort of talks, everyone kind of went back on their comments as well. So just a very crazy flip in sentiment and a very crazy price action, but nonetheless, it's been a very interesting year and whatnot. And before I cover into the performance, I just want to briefly mention that we will be having a webinar upcoming just talking about the income playbook. So in this webinar, I'll be kind of covering different income strategies and comparing and contrasting and kind of seeing, just comparing elements and which one might be more favorable, not favorable, etc. So this should be a pretty good webinar overall, but we'll be having that shortly. Now we'll get right into the model performances for the year. So, the dividend model, which performed really well during the downside, is now just barely beating the markets. But during this rally phase, as you kind of see, you have a big shift from value to growth. Of course, a lot of the growth names have been seeing a lot of the momentum. So during that time, I've kind of been taking profits on a lot of the dividend stocks, and I'm holding some cash, and I'll definitely look to allocate those soon. But the dividend did provide a very solid sort of footing for the markets whenever it was seeing a large drawdown. And of course, I expected it to struggle, which is why I pulled and took some profits on some positions and whatnot. The next one is the large cap. So the large cap is up 5.61% as of yesterday. This is outperforming the S&P by almost 5.1%. Again, as of yesterday's close, so a very strong outperformance so far. And yeah, a lot of that was contributed to just allocating the rest of the cash during the April bottom. And yeah, I mean, a very stark rally and just a very good sort of outperformance for the large cap model so far. The next one is the booster. So the booster is up almost 6.8% and almost a 6.3% outperformance on the S&P. So yeah, this one did drag a little bit or quite a bit actually during the market downturn, but we were able to quickly capture a lot of that upside and whatnot. So I think this one, since that April lows was up close to 38, 40%. But I mean, a very great rally, especially the past couple of weeks. I've had a couple of days where this model is up almost 6% per day last weekend, this week. So, yeah, very happy with the performance so far, but we still have quite a few ways to go. I think this one will easily be into the double digits, hopefully by the end of the year. So, yeah, very, very happy with how this one went. Of course, my best performing model right now is this sector rotation. So this one is up 9.46%, so almost just shy of 9% outperformance on the S&P as of yesterday's close, and this one has made a new all-time high. So yeah, I mean this one's done really phenomenal during the market downturn and has even had some upside alpha whenever the markets were rallying. So, since the rotations pretty well and overall managed the portfolio, or sorry, this model in a very good fashion. So, yeah, I kind of expect to see some continued bullish momentum, but of course, I'll have to monitor and take note of those changes as it goes. But a very good start so far for the first half of the year, and hopefully, and I'm very confident I can continue the performance and the outperformance throughout the end of the year as well. I mean, of course, it's been very volatile and stressful, but I mean, that's just part of the job. So, yeah, we'll get into some charts. So, in that previous video, previous couple of videos, I was mentioning this 48.34 level, and I mean, we in the overnight session for that Sunday night open, we basically hit it to the exact T. I mean, this was an absolute. I've never seen a level stick to that sort of perfection, especially with the large and volatile days and whatnot. And so, yeah, now we're back up almost just 4.14% off from the highs. I mean, this has been an absolute phenomenal rally, and we're just blowing through every level. So the very first thing I was sort of watching was, of course, this minus 50% level, which on that day that Trump announced the tariff pause, we kind of hit right into it. And then the next day we saw a little sell-off, but we kind of found support again, being very simplistic here, but we found support at the 50%. Uh, Retracement from the lows to the highs, and now we're kind of going back and hitting some targets. So, yeah, first thing I would kind of expect is to see. I wouldn't be surprised if it came back at least into this 576, sorry, 5760 area. I'll actually show you this on S&P since it'll be easier to compare it to. So, somewhere around the 572 level, which also kind of has this gap fill. We have this prior major level and the 8 moving average and quite a bit of confluence in this area. And then we can kind of see what happens from there. But we are a little bit extended above the 8 moving average, so I would expect to at least see correction or a little pullback into that, which is around 2.6 to 3% sort of move. But that's something that I would look for. For the Qs as well. Uh, if we go back into the 8, this is around almost a 4% pullback, but I would kind of expect to see price sort of stabilize here and kind of dictate and see what happens next. Again, I think this market's, or not think, I mean, the markets have been very, very news driven, especially with any tweets or updates from the president. So, we have to be very mindful of any flip in action or if any of the not trade agreements, if the 90-day pause comes out early and whatnot. So definitely have to pay attention to that. But I do think, at least on the short term, we are pretty overextended. But again, markets can keep on rallying, but I would look to see some sort of retracement into this area. And honestly, this maybe within a month or so, I wouldn't be surprised if S&P and Nasdaq hit their all-time highs. I mean, we're only 4% off, which is basically peanuts at this point. If after we're seeing a 22% rally, why not go all the way, right? But that's something I would not be too surprised if we did see an all-time high, especially with the indices and just the amount of volatile moves that we've been seeing. I mean, we've been breaking records back and forth. This 3-day period after that Liberation Day was the worst 3-day stretch. And then we had the single largest intraday rally of almost 12% in stock market history. And then we also saw the longest, or like the second longest, I think, 8 or 9 day rally in the market history. So we're just breaking records back and forth. And also on the note of positioning, I don't have the data right in front of me, but I was reading some reports from Goldman and JP Morgan, and they were saying that the CTAs and other fund managers are very severely underallocated for their long equity positions. A lot of them sort of positioned into Europe, a lot of positioned overseas. Now, they're severely underweight the U.S. equity markets, which can also support a future, or a further rally. And whatnot. So once those funds are very underweight, they do have to come back to allocation standards. And if that's the case, then we do have quite a bit, or we have quite a bit of buying power on the sideline. So again, wouldn't be surprised if we go back into this all-time high area. I'll just cover gold. I think, of course, gold is the inverse trade here. So it's coming back into its 50 moving average so far, but I think it could easily come back at least into this 3,000 level and then kind of see what happens from there. But I mean, gold is still up almost 19% on the year, and now we're kind of saw this double top, and we're breaking this little 3200 M or this pattern here. So yeah, I wouldn't be surprised if we kind of get back into this $3,000 range and per ounce, and I would look to maybe start a position into that. I'll just kind of go over some positions that I added in some stocks that I've been some of my favorite stocks. So one is Uber. Uber did hit all-time highs yesterday. I did add into this position during the market dip, And I mean, yeah, just a very phenomenal stock. The earnings have been great. The revenues have been great. And they're getting a lot of traction on the driverless cars as well. So, yeah, very beneficial stock. And I mean, I'm glad it's hitting all-time highs. For its for the stock and whatnot, but just showing the market leadership, but again, just holding onto that position. Another favorite of mine is CrowdStrike. When it comes to, again, in my opinion and sort of what I'm researching, of course, this is an anti-tariff play as well. This will be completely unaffected by any tariffs that are issued and whatnot, but cybersecurity will be a big hot topic when it comes to the AI implementation and how far. A lot of the security measures are going to counteract any possible hacking and just data breaches and whatnot. I'm sure AI will have a huge part of it, but I'm a very strong believer in cybersecurity for the next 5, 10 years, especially with the ramp and boost in AI and whatnot. So technically, this stock is forming a cup and handle. So you do have this cup, and now you're into a handle. So yeah, I wouldn't be surprised if this sort of breaks out, maybe even hits $500 soon. But yeah, one of my favorite stocks there. Some of the trades I've taken, I did add into Palantir. Again, I mean, this move is just insane. I mean, from the lows, you basically had almost a 100% move, but I did add this around, I think, 90s and took a trim on the position. But another one that I sold out of completely was Team. I had this around 47, 46, and my last sell was yesterday around 69 something, so almost a 47% gain in that stock. And then another one was Coin again. I had this around 207 and I sold half the position yesterday. And of course, this S&P inclusion news helped quite a bit. But what's kind of interesting to note with the earnings is a lot of the stocks actually did not have the best earnings report. And the exact opposite sort of reaction happened, right? Coinbase missed its earnings by 90 or its EPS by 90%, but it's still rallying. Spotify, sort of similar thing. They had down numbers and guidance throughout all metrics, but the stock still made a new all-time high. So very mixed reaction on the earnings side, but I'm sure after this 90-day pause, I would expect, especially any company that's relying on China, they would more than likely have increased their spending and surplus and take advantage of this 90-day pause. So I'm sure that'll create some relief for a lot of those companies that are reliant um, on the products and whatnot from overseas. But the last thing I'll cover, Bitcoin. So yeah, this chart looks very crazy, but Bitcoin again kind of held this 50% retracement, and then now sort of just teetering at its previous highs and whatnot. So yeah, I think this could even come back into the 100K range and then evaluate what to see from there. But again, my biggest view on Bitcoin and crypto is just kind of judging it as a risk on, risk off indicator. So, if cryptos have been catching a bid, then a lot of small cap stocks, mid cap stocks, a lot of those crazy movers would catch a bid. Speaking of crazy, I'll show you this one. This Rengen or Regencell Bioscience. This stock at the max was up 10,000% year to date. It went from being a $1.50 stock to at the highs a $550 stock. Apps for again for whatever reason, right? I mean, just the crazy. You'll start seeing crazy moves like this sort of occur, and even since this, from $30 all the way to 550. So yeah, a lot of stocks, if you start seeing momentum like this, you're getting into a euphoric sort of phase of the market, and I wouldn't be surprised, like I said, if we kind of see this pullback. But yeah, overall, I think management wise, it's been a pretty solid sort of performance so far, just 5 months into the year. And I definitely anticipate to sort of build on that momentum. But if you have any questions or just want to chat, just please reach out to me. And if you're looking for other income options, I've been posting structured notes into the chat. Of course, I think a lot of people are very fearful to invest in any of the structured notes, but I mean, we were getting some very good yields into this area, and we did have quite a few people invest during that time as well. So, I mean, yeah, it's we had some good notes and had some good diversification measures and whatnot. But yeah, that's all I have. If you have any questions, please reach out. And yeah, hope you enjoyed it.